Hello everyone, I'm Venkiat Luong. Today I want to talk about a skill that most investors overlook: when and how to sell a stock, not buying. Selling. Gil Morales and Chris Kacher, two outstanding disciples of legendary investor William O'Neill, built an exceptionally clear rule-based selling system that is, more importantly, repeatable without emotional judgment. The entire system revolves around just two moving averages, the 10-day MA and the 50-day MA, and one foundational principle, the 7-week rule. In this video, we will walk through every step. By the end, you will have a concrete checklist: when to sell, how to sell, and how much of your position to exit. Let's start with a question most investors never ask before buying. After entering a position, which MA do I use to sell? The answer comes from the 7-week rule. The process is straightforward. After you enter a position, whether via a pocket pivot, base breakout, or gap up, you observe the stock for the first 7 weeks. The only question is, does the stock consistently respect the 10-day MA? If yes, the stock stays above the 10-day MA throughout all 7 weeks. From that point forward, the 10-day MA becomes your sell line. When the stock violates the 10-day MA, you sell. If no, the stock breaks below the 10-day MA before the 7 weeks are up, disregard the 10-day MA entirely, your sell line becomes the 50-day MA. Why is this rule necessary? Because not every stock moves to the same rhythm. Some stocks trend strongly but are choppy and don't hug the 10-day MA. Selling on a 10-day MA violation in the first 7 weeks could shake you out of an excellent position. The 7-week rule helps you correctly categorize the stock before taking action. Before covering how to sell, we need a precise definition of what constitutes a MA violation. This is a point many investors get wrong. They see the stock close below the MA and sell immediately. That is a mistake. The correct definition is a two-step process. Day 1, the stock closes below the MA. This is a warning signal. Take note, but do not sell yet. Day 2, if price breaks below the intraday low of day 1, that is, the low from the previous session. This is the moment to sell. Only when both conditions occur is it considered a true violation. Why 2 steps? Because strong stocks often dip briefly below the MA before recovering the same day or the next. This 2-day rule protects investors from selling prematurely due to short-term market noise. The entire selling system is built on just 2 lines. 10-day MA used when the stock has consistently respected this line for 7 or more weeks. Sell signal, close below the 10-day MA with confirmation on day 2 per the 2-step definition above. 50-day MA used when the stock failed to hold the 10-day MA in the first 7 weeks. Volume plays a decisive role here. If the stock breaks the 50-day MA on abnormally heavy volume on day 1 itself, sell immediately. No need to wait for day 2 confirmation. If volume is normal, apply the standard 2-day rule. One more thing to remember: after selling is not over. Wait for the stock to consolidate and form a new setup, then look for a new entry signal, pocket pivot or breakout, and re-enter if conditions are met. Knowing when to sell is one thing. Knowing how much to sell is another. Morales and Kacher outline 3 scenarios. Scenario A: stock respected the 10-day MA for more than 7 weeks, then breaks the 10-day MA, sell 50% of the position immediately upon the 10-day MA violation. Hold the remaining 50% and exit when the 50-day MA is violated. This partial profit-taking approach limits risk without closing the position prematurely. Scenario B: stock breaks the 10-day MA within the first 7 weeks after entry. Ignore the 10-day MA entirely. The only sell line is the 50-day MA. Sell the full position when the 50-day MA is violated. Scenario C: volume factor with the 50-day MA applies to both A and B. If the stock breaks the 50-day MA on abnormally heavy volume on the very first day, sell immediately without waiting. If volume is light, wait for day 1's low to be broken. These 3 scenarios are not mutually exclusive. They complement each other and all begin with the same question: did the stock hold the 10-day MA for a full 7 weeks? Theory becomes much clearer with real examples. I have 4 examples from the US market taken directly from the book. and 4 examples from the Vietnamese market in recent periods to illustrate the same principles. This is the Apple chart from 2006, the same example used in the previous pocket pivot buy point lecture. You can see the stock holding the 10-day MA for many weeks during the uptrend. The violation occurs in early December, close below the 10-day MA, followed by price breaking below the previous session's low the next day. The sell signal is confirmed under the 10-day MA rule. Crocs in 2007, a strong gap up in May 2007. From that point through the end of June, more than 7 weeks, the stock continuously respected the 10-day MA. When the 10-day MA violation occurred at the end of June, that was the time to take profits. AKS in 2006-2007, pocket pivot in October 2006. Looking at the early phase, within the first 7 weeks, the stock broke the 10-day MA that signaled the switch to monitoring the 50-day MA. The stock then continued to rally for nearly a year before violating the 50-day MA in August 2007. MOS in 2007. This is an example of closing below the 10-day MA without a true violation. After the breakout in late August 2007, the stock closed below the 10-day MA twice, but on neither occasion did the next day's price break below the previous session's low. No violation, no sell. The stock continued to climb. Had you sold in a panic on the first close, you would have missed the subsequent gains. Now, let's apply the same system to the Vietnamese market with 4 real recent examples. These 4 cases demonstrate that the Morales and Kacher system is not exclusive to US stocks. It works in any market with clear trends, sufficient liquidity, and moving averages. DCM, a recent real-world example. In early January 2026, DCM triggered a pocket pivot entry. From that point, the stock held above the 10-day MA for over 7 weeks. In mid-March, DCM confirmed the 10-day MA violation. Selling on that signal allowed you to exit near the top at a favorable price. SHS in 2025. Pocket pivot in early July 2025, hugging the 10-day MA for over 7 weeks. 10-day MA violation in late August 2025. Sell. That sell signal allowed you to capture the majority of SHS's upside move. The stock subsequently corrected significantly, notably after selling on the 10-day MA violation signal in late August 2025. SHS triggered a new pocket pivot entry on May 8, 2026, following an extended consolidation period. Re-entering at that point for a fresh upleg at a better price significantly improves capital efficiency. DEG in 2025. This stock was also featured in the previous pocket pivot entry lecture. I've revisited it here to illustrate a complete workflow from entry to exit. Pocket pivot in late June 2025. In early August 2025, DEG violated the 10-day MA within the first 7 weeks from entry. We switched to the 50-day MA. DEG held the 50-day MA for nearly 2 months before violating it in early October. Sell. That sell signal allowed you to exit near the top and avoid a prolonged correction that followed. Re-entry became available at a new pocket pivot in late April 2026 after the market showed signs of bottoming in March. HCM in 2025. Similar to DIG, the entry was a pocket pivot that coincidentally aligned with a breakout in early July. HCM violated the 10-day MA in mid-July within the first 7 weeks. Switched to the 50-day MA, HCM violated the 50-day MA in September. Sell. Let these 5 core points stay with you. 1. Always start with the 7-week rule. This is the first step to determine which line to use, the 10-day MA or the 50-day MA. 2. A MA violation must be confirmed over 2 days. Never sell solely because a stock closed below the MA on the first day. 3. Volume is decisive with the 50-day MA abnormally heavy volume on the first day. The 50-day MA is broken. Sell immediately without waiting for day 2. 4. Flexible strategy, you may sell 50% on the 10-day MA violation and hold the remaining 50% until the 50-day MA is violated. You don't have to sell everything at once. 5. Selling rules applicable to all prior entry methods, pocket pivot, breakout or gap up. Different entry methods but one unified selling discipline. Entering at the right point matters, but selling at the right moment is what determines the profit you actually keep. The Morales and Kacher system accomplishes something most investors cannot. It removes emotion from the selling decision. Instead, it gives you clear, repeatable rules that have been proven throughout market history in both the US and Vietnamese stock markets. Thank you for watching this video all the way through. If it was useful, please like, share and subscribe so you don't miss future lectures in the Stock Market Essence series. See you next time.